FutureSpeak, March 1st, 2017. Well, some of the things that were going on before I went on my 1 week vacation have continued. That's especially so for the stock market, which has moved up relentlessly. Sometimes the patterns get to be incredibly difficult to read when you have a steady move that just doesn't stop in one direction or the other. That's one of the maybe weakest times for cycle analysis, because when markets are moving up with barely even a downtick, then there's no lows to read the cycle patterns off of. So there's a lot of guessing, and what would be, even in a bullish market, some normal occurrences of just some minor pullbacks to measure off of. Well, they haven't happened in this stock market. And then here on Wednesday, after the State of the Union speech, the buyers just came in a giant way. A lot of help from the European markets, which got driven up by the prospect of higher interest rates, as the banks in Europe did extraordinarily well. That brought a lot of buying here also in the United States. And yes, we have had some big upside moves here in the stock market. S&P's up 35 points basically on the opening. Dow up over 300 points. So this is a massive extension, and we have talked about in the stock market that we compared 1987, 1962 as years where we had extended bull markets and then an extension on top of the extension. That's basically what we're getting right now. Usually they go up to levels that you don't expect, and then when it's over with, the corrections are sharp and severe, but it's hard to tell where they're going to come from. And in this stock market, well, it's been quite difficult. The other things that we look at, some of those other markets, the currency markets have been really spot on patterns, really great. Same thing for the bond market, which had kind of a false rally and then turned down again sharply, right where it is supposed to. So it's been, many of the markets we look at have been much easier to analyze based on the rhythmic patterns than the stock market has. And so we're going to look, of course, at 5 different markets in here, then plus the grains, coffee, and the cotton market, whereas we look at the grains and softs at the end of the show. We'll start out with energy, as we always do. Energy market has been very tight, in a really tight pattern, and the pattern that we're looking at favors the upside. Now, we've been bullish in there, and there's been a lot that we have read that has said that there is pretty good supply still going on, and that it has analysts wondering why the market's not moving to the downside. Well, I mean, based on these cyclical patterns we're looking at, there's upside pressure. Again, what we're going to do is start on the weekly charts and then move over to the daily charts for you to see. Let's start right now as we look at the light crude chart on the weekly chart. So you can see the tightening that's going on in here. So as the market had this sizable gain moving up from the low 40s to the mid 50s, that brought some selling in, and there's a big monthly resistance that you can see right over there. So there's some overlapping in phase and out of phase cycle patterns that you can see on the bottom. Note the big black one right in here. That is the one that was really driving the market. You can see that low right there as it lines up with it. The same thing here and right over here, and then right over here. You can see that. So that's that big pattern right there. There's a smaller pattern that we added in there. That's that purple one right there, and it's about a 14-15 week pattern, and you can see how that is laid out also. As you can see, this is the rhythm right in here of that cycle pattern right there. And yes, there's a bottom that occurred in that pattern right at that point. So if you look at the big pattern, you see that that's in this rising phase. You look at this intermediate pattern right there, and you see that's been in a corrective phase. So you've got this fighting this over here, and it gives you this tight pattern that you see right there. Then what happens is that once the smaller pattern in there, this one that we're talking about here, lets go, you then start to get a rally. So that's what's going on right here. Then you had this little pattern right here that was pushing down, and that is getting ready to turn up. So what I read here is that you're going to have 3 of these pushing on the upside, well, any minute. And that says to me that the odds are higher that we're going to get an upside breakout in the light crude market when I look at this. So that would get us up into this area of the around 57 to 58 as soon as this, we'll call it upside release, goes on. So you can see it's got down here into this intermediate support zone right there, and the counter trend line, which was kind of a breakout number. So that would have been at this low at around 51.5, and now it has been, really tight, but giving me the indications that the move is coming on the upside. So now let's switch over as we look here at the daily chart, and I'll just take a little further out look right there. So this right over here is kind of moved over from the weekly chart, this one right in here. And like we talked about, we're about to get into the period of the upside release right there. That says, you can see this tight upward pattern that's going on here, kind of a little wedge. And maybe you have another couple days of fooling around in here, but the odds are really increasing that we're going to be moving to the upside. So overall, what I'm reading in here on the light crude market is bullish based on both of these patterns. The green zone, as you see right over here, about to release on the weekly, and then about to finish here on the daily and then move up right there. That to me is bullish, and I can see some upside move coming in there. So now let's switch over to gasoline. Now the gasoline chart is messed up on the weekly. Why is it messed up? Well, there was a large contango in there, and that has this jumping up where you see this bar right over here. Interesting, it comes at a time when we were just completing this and getting ready to move up, as you can see there. So when you get this big contango, what happens is that it often then pulls back a little bit, but then I think it's going to grab and move to the upside right there. So we have to kind of let a little time pass and get this chart get back into something that makes sense to us. But the timing makes sense, but the pricing doesn't quite. Now on the daily chart, because it's a continuous pattern, you can see that it actually is more in line. It doesn't show that big contango that occurred on the roll being, you could see right over here, and that so it's a little easier to read. And this is a more negative looking pattern in here, as it's in that corrective phase, but the corrective phase only has 3-4 more days to go in here and then up. So this aligns with light crude, and you can see we're in this short-term support right over here, and that says to me that there's not much more downside in here in gasoline either, and that's likely to start moving on the upside also. So this is another one of the energies that I'm liking. Now heating oil has been kind of on the flattish side, affected by the warmer weather, and natural gas got cremated by the warmer weather, and you could see that it's in this support zone right now, and very similar to what we're looking at timing wise. This is the declining phase and this is the rally phase, so you have 2 of them pushing up right in here. So that would be this right in here. You can see as we have it drawn in that support zone. So we think it's about to get a pop up there in the heating oil market also, as you could see that alignment. We're on 2-year on here, so we have to come back in on the daily chart. And the same thing you can see in here, maybe just another few days and then turning up as it got into that squeeze, essentially, the minor resistance zone right over here, and then this cycle support right in here and the short-term support right in here. So it was kind of being squeezed in between the support and resistance area, not giving any ground really, just if anything it's just kind of this wedge pattern going on that you can see right here. And then as we get into this rising phase, as you can see, we have it drawn there, that pops up again, and that occurs in the next 3 or 4 days. So we're really looking at this week or the beginning of next week to be the end of this corrective phase we're in here, and potential by sometime next week to start moving to the upside. And that's just, to me, really important analysis and some good opportunity. So of course we want to let the market prove it to us, and then hopefully it'll be clear that the upside move in the energies we're expecting is happening. Now here is a sad look at the natural gas market. So this green zone in here is going to change right in here. It really ends at this point because it's come down and tested this major level right over here. So there's a lot of trouble here in natural gas when we look at this. Now you can see that there's a low that's due right now. So this low here aligns with the rest of the energy. So we're looking for a rally right in here, but it's very likely to stop in this resistance zone. You can see right now we're not anticipating very much upside in here. Certainly could get a pop up to this part of the resistance around 305 sometime in coming weeks. We're just going to keep it conservative here because this is really a bad pattern. This is all turning yellow in here for big caution, and if it gets underneath this low, this extreme low it just made under the 252, it's going to be a red zone for a long period of time. So what are these cyclical patterns we're looking at? Well, you can see right in here, you see that one, and then you see that one, and then you see that one. You can see how that's all in there, the upward stair-step movement. And then this one, driven up by 2 cycle patterns, and then it comes down and equals the low. That is a bad thing. That says that you're going to be in something like this going on here. And you can see that setting up for a lot of ugliness out there moving forward. So this hot weather in here was a real problem for it. When I switch over to the daily chart, you can see in here this extreme warm weather as you got the big break in here from the 320s all the way down to 2.5. That was a pretty major break, 265 right over there. Now we're in this rising zone and you're not getting much. You can see there. I actually think if it gets up into this resistance, that's about 304. That might be the best we can see in here. I'm not playing the long side in here based on these breakdowns and the pattern here in light crude gasoline, far better. I mean, no reason to buy natural gas in this kind of a really horribly weak pattern when you look at the fundamental aspect of it, where all the warm weather certainly has left a lot of natural gas still out there, whereas the stock market, which is screaming based on stimulation and anticipation of growth, well, that's of course more bullish for light crude and gasoline than it is for natural gas. So I would, if I was looking for long side trades in energies, I like light crude and gasoline a lot better, and there's a lot of the energy stocks that are getting into bottoming phases that I think will be a rotation into those stocks that will be much better trades, much higher risk rewards than trying to pick a bottom in natural gas. I guess that's what I'm saying, is that you don't buy the weakest one, you buy the ones that are the strongest, because that's where the buying is and you've got less risk. That's really counterintuitive to many people who want to be contrarians, but the market continues to prove that you buy the strength and you sell the weakness. You just watched the opening segment of FutureSpeak. That's our video that we do every single Wednesday, where we look at 6 categories of the futures markets. We look at, as you just saw, the energy market. We also do foreign exchange, the metals markets, the treasury market, stock index futures, and then the grains and softs. We cover so much In these videos, we illustrate our very unusual style of analysis called cycle analysis. We incorporate timing into our analysis, and it's pretty unusual, as you just saw. You want to see the rest of this video and get all of our videos that we have, more than 209 different categories in our video library. All you have to do is send me an email, slim@askSlim.com, and I will be glad to send you a special link for $16.50. You can get all of our videos on trial for 1 month. I can't imagine how you could not do that for that amount of money, and all of the learning that you'll get from our very informative videos. Also, if you're watching this on Twitter, just all you have to do is click on the link on Twitter, and you'll be taken right to our membership page. $16.50, more than 200 videos, and me, more than 43 years of experience as a trader. You have any questions? Let me know. slim@askSlim.com. I hope you love it.